All right, so let's do some level spotting for this particular asset, just as a quick exercise, and then what we're going to do is keep an eye on it, and let's see if there are any discrepancies with what you think should be levels, right? So, for example, what I'll do is I'll mark a monthly level that I'm interested in, even if it's nowhere near, right, where I'm going to be trading. I want to know what the upper band monthly level is. Okay, so this is the monthly. Let's take a look at, and I'll usually change the, modify the colors, but I'll use black as the monthly, weekly, daily, and then I'll use gray for anything underneath, for the most part, just to show the level of importance for the actual price. So if I'm going to be trading here, right, which is where we are on the simulator, I'm going to look at what my monthly ranges are from a resistance standpoint. So I think I would probably go there as a monthly level to take into account. Yep. And it's based on these wicks, a little bit of an outlier. So usually when I see wicks that are way out of whack, I probably factor them in a little bit less than the average. I will take this into account. I will take this into account. I'll take that support. I'll take that support into account. This resistance here, that support and resistance in a way also take into account. And that would probably be the general area that if price was hitting here, my bias from my monthly perspective would certainly start looking like a technical short, for sure. And then I'll do the same thing for the bottom for longs, right? I'll look at where I can find a decent level that makes sense. And this would probably be the one. I'm looking to see if this one would be an interesting one as well. But I think taking into account monthly swings, right? It's important to take the full movement into account. And yes, there's a swing here that is not being taken into account. But this is where I would basically encompass the current price action. I think that if we got here, support, resistance, support, that area there, these 1,500 pips should be the monthly kind of sideways expectation looking at the price action that I see here. Then I'll drop to the daily within that range, and I'll see what I can spot. I'll try to get as much data as I can, and I'll try to spot some daily levels in the same way. So I'm going to grab the most immediate resistance and support levels that I think might be relevant. In this case, well, this is, I'm glad we chose a pretty tough looking chart. But here I'm looking at support here and resistance there. I'm looking at resistance there, resistance there, resistance there, and there as well. And kind of averaging out all those points to somewhere in the middle where I would want to have that line. Yeah. Again, the higher the time frames, we're in the daily now, and I should have done the weekly first. Let's see, because we did the month. It's the monthly that we did, right? So we should be looking at the weekly. So let me take that off really quick, so I don't skip a part of the phase here to see if there are any weekly levels. There might not be that are any different or valuable, but I want to see. I spot this level on the weekly here, where I have support, resistance, 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 resistance. Then we've got a bunch of resistance there again, and then a bit of support and a bit of support and maybe a bit of support there, right? So that level there, that zone, which again, if you imagine it as a zone, encompasses quite a bit above and quite a bit below, seems like a decent weekly level to be pointing out, within the range of where the monthly is here, this level and that level there. So now we can move on into the daily and see if we can spot anything as well. So let's see, we've got this level here, maybe of interest. And then I will just kind of visually try to get an average. So this is an average, again, of these highs, these lows at support. I bet these lows at support, these highs here, and these highs there. Yeah, and then these as well. So we have a little bit of a, an average of that level at the daily level. Yep. Now also look at the breakdown here to get a good idea. And we'll take one more. We'll put one more at the bottom. Let's see. This one is an interesting daily level for sure. We got support there, resistance here, but see it's quite not quite touching, but because we have some other levels here of reference along that zone, I'll kind of just do it a little bit by eye there. Then we've got this level here, which has support, resistance, support there as well. Yeah. So that's another decent daily level. Let's see if there's anything else here. There I spot a daily level as well. Resistance, this one is covered by that, but this one and this one, these two resistance points, these two support points here, this resistance point and that resistance point gives us a good daily flip zone level as well. And then there's kind of a level here as well that I would like to mark. And that would probably be somewhere around the lines of there. And that covers this resistance, that one there, this support, this stall and support, this support here, that support there, and that support there, and even that one there. Yeah, so now that I have my daily levels, again, this was back in 2016. We were getting 150 pip moves per day on these. Yeah. So I don't know that the H4 is going to give us anything else because the dailies are pretty tight. What I'll do is I'll see what the more or less the move is between dailies. That one is 270. This one is 180 pips. This one is 180 pips. This one is 280 pips separation, right? So I don't know that I need seeing what the daily average, daily ranges are. And we have, again, back in 2016, 200 pip moves on a daily basis on Euro AUD, 230, which we probably don't have anymore. Then it's very possible that, that I don't want to have, H4 levels and that I can just trade within these, not to overtrade. Yep. Nonetheless, I would always look to see if there are any interesting H4 levels in the immediate vicinity of what I can see on the H4, and I can basically zoom out just a bit more and see if we can get any. What I'll do is I'll change the color to indicate that these are lower time frame zones. That's a good point for one. So we've got resistance, support, resistance, bit of support there, and resistance there, and resistance there as well. So that would be an interesting H4 level at which maybe a reaction could be expected. Let's see if there's anything in between here of interest. There's certainly something here. So we've got support there, resistance. We've got 3 support points there, another stall support point there, a wick here, support there as well, a bit of support there between there and that level. So that could be an interesting point. And these can be used not only for entries, but also for targets and for spots at which you're having a higher expectation for a stall. Yeah. So you can watch price into these levels as well. Let's see if there's one more of interest, because I see a little bit of a reaction here. And you'll notice in many, many, many cases that there's almost an equidistant pattern, yeah, to where you're putting your H4s between your dailies, those intraday kind of pauses or stalls or or turning points are usually well represented. So here we've got this wick, we've got support, resistance, the stall, support there again, support there again, resistance there. See how all of these have that intermediary point, right? If you put this one here as well, again, you're creating a break point between your daily levels with your H4s. And that happens almost in every chart that you analyze and level spot on. Yeah, it's almost a guarantee that you're going to find those levels. Then what you can always do is you can go into the H1 and see where the stall points between the H4 intraday levels are, and maybe color code them in a different way if you do see them. So again, we're going to look at, we've got between levels about 100 pips, about 70. This one is going to be another 100 or so. 100 pips, that's going to be, right? So again, you're going to have these levels clearly marked, and the more you zoom in, the more you're going to see those reactions being averaged out by those levels at all times. So what you're going to try to do by setting these is making sure that you're averaging as many points of inflection as possible. So as many support points, as many resistance points, as many stall points and congestion points as you can to fit in that zone, and then average that out to put your level. And you do that on the multiple time frames to end up with something that on the daily kind of looks like this, right? Which looks a little bit congested, but again, this is only on your charting where you're looking up for your setups and you're setting up your trade plans. It doesn't necessarily need to be on your active charts on your total market view. On my total market view, I don't really have these levels, right? Because again, I kind of know where they are, and I'm constantly cycling through the time frames, and for the most part, I will have the levels mapped out on a trade plan, or I will just be doing them from just visual analysis, right? Which again just comes with practice. It's nothing else. There's no special skill involved in not having to have a congested chart. It's all based on how often you do it to the point where your brain just recognizes these levels without much effort. So going back to the hourly, it would depend again on how you're going to trade. If you're going to be trading, if you're going to be scalping, or you're going to be doing really short-term, quick reaction trading, you're probably going to want to have your 1 hour levels there at the minimum. Yeah. If you're going to be setting up to hold things for a couple of days, then the H4s and the dailies are probably going to be enough for you to make trading decisions on. Yeah. So for the purposes of this example, let's not set hourly levels specifically, but if you did want to, the best way to do it is to just go between these levels, yeah, because again, you don't want to be redundant. Go between these levels and see if you spot anything around the midway point, and oftentimes you're going to, like for example here, right, where we've got a bunch of resistance there, turn support there, a lot of congestion there, resistance there, right? Support here. You're going to find those midpoints that you can just go in, right, and mark them. Where was this one? There, more or less. Change its color to, I don't know what we normally use. I think we use some, fuchsia or something. Whatever the case is, right? So when you're zooming in and out, what type of level is on your chart, whether it's a high-end daily, weekly level, or whether it's an intermediary H4 level, or if it's a short-term H1 level, whatever the case may be. Color coding kind of helps you determine, where those levels are going to be. But you're doing the same thing. I'm averaging out, and it's a zone. Yes, so I know that somewhere around that area we're going to get a reaction. I don't know if it's going to be before that price point or after that price point, but I would be expecting. These are basically the higher probability reaction points, those magnetic support and resistance zones that price tends to navigate towards when something is being priced in, or when the market is pushing something into an area where it's then going to wait. Yeah, and it's that waiting, that stalling, that causes the reaction. In a couple of ways, it could be just profit taking that causes a reversal at that reaction point. It could be a news event. The market is slowly moving into that level, trying to make it coincide with the news event. When the news event hits, boom, a reaction occurs. It could also just be time decay, right? Nothing is happening at that level. Everything is priced in, and just get natural ebb and flow of the market sideways. And that sideways price action at that resistance level, for example, is usually enough to be able to sell that resistance as a range trade every time price comes up there, or even on the bottom band during a support run as well. So you're basically looking at the levels where those kind of events, which are the ones that you can take advantage of as a trader, especially if you're doing mean reversion, right, are going to be the most effective. Where these levels are also really effective is when they coincide with areas where you've got the moving averages and the trend lines for trend trading. But usually the big value for these are for reaction points. Where can price get to? Where is it going to stall? Where can it turn? Yeah. So from a mean reversion trading standpoint, these are going to be absolutely critical to have because you can probably trend trade just with the MAs in all honesty, but and you're going to be using the levels, as points in which you might want to exit your trade, right? Or levels at which you might want to re-enter the trade with extra confluence as a value trade once you get a pullback in the trend and you're able to get back in if you're following one. So the importance of setting your levels properly from a technical perspective is immense because technical trading or technical analysis in trading is probably the simplest thing out of everything that you need to take into account for in order to build an approach to trading, a professional approach to trading. The technicals are probably the easiest thing to tackle, yeah, which is probably why everybody navigates towards them first, why it's the easiest thing to understand, because it's something that is there, it's visual, it's price action. You've got a ton of history to go by in order to test where these levels are and find out how they work and everything, as opposed to something like sentiment where it's a bit more abstract, subjective, requires active research, where the information is not always readily available, requires interpretation to a certain degree, while as technical trading, more or less, can be considered as black or white. Yeah, either it's telling you something or it ain't. As simple as that. And as the cornerstone of technical analysis, I would say, in my experience, that spotting these levels as accurately as you can is half the battle won with technical analysis. Forget fibs, forget moving averages, forget stochastics, forget SHI channels, right? If there was only one thing that you could focus on and one thing only that you should master, it's going to be level spotting, because level spotting will allow you to trade almost blindly. Yep. Again, if you have no other information or if everything else is muddy as heck and doesn't make sense, the levels are sometimes things that you can rely on when everything else around you is dark. Yeah. I hope that made sense. That's why I think it is the most critical aspect of, learning the technicals. And just because these levels, if properly spotted, give you really the highest probability reaction points. It's as simple as that. And you can't go deeper than that, right? Now, what you can do is add confluence, right? So add your fibs, right? Add your MA confluences, add, your pivot points or whatever you use, add your stochastics. All of those are supporting agents, I think, in determining whether you're going to use that level or not. Yeah, from a technical perspective. Yeah, we're not adding anything sentiment or fundamental into the mix yet, but from a technical perspective, the levels are going to be where you're going to be focusing on, and then you're going to be adding confluence factors in there to make a determination. Yeah. Then once you get into sentiment, then you're obviously going to read sentiment and understand whether you're going with or against short term, with or against midterm, and make decisions based on that. But again, that's not part of technical analysis training. Yep.